security or asset-backed tokens? Asset-backed tokens are tokenized securities or equity which are pegged to real-world assets, such as company stock, real estate, bonds, or commodities, for example. They are a subset of security tokens and allow users to hold ownership rights over a physical and tangible asset in digital form. Asset-backed tokens, or ABTs, are an important type of token as they represent real assets. The subset is important because they allow investors to hold a value that is outside of the US dollar and other fiat currencies. Security tokens ensure higher liquidity as well. They permit fractional ownership of assets, potentially like houses, gold, so investors could own a portion of the assets. Security tokens ensure higher liquidity. They permit fractional ownership of assets like real estate, gold, so investors could own a portion of the asset. ABTs can help fractional and trustless participation in investments such as real estate ventures, ownership, or intellectual property and royalty payments. Blockchain is immutable and public. Blockchain solutions will not only increase the accessibility of financial services, but improved accuracy across the ecosystem as well. Blockchain applications will make the financial plumbing more efficient and more accessible than ever. Increased access will have the potential to significantly grow the STO market. Security tokens take real-world commodities and make them digitally tradable. It is entirely conceivable that present third-party custodians for valuable assets such as oil, natural gas, wheat, or sugar, essentially commodities, will be tokenized. Current auditors who verify the security and trustworthiness of custodial storage could use blockchain apps to facilitate audits. Blockchain's immutable public record can be used to instill greater confidence in the market. Security tokens are designed to offer secure, rapid, and minimal cost of trading in traditional assets, thereby increasing liquidity into traditionally illiquid markets. Remember, an asset with increased liquidity is easier to sell. As a comparison for traditional investments with bonds and stocks, which do offer higher liquidity as compared to financial vehicles such as real estate and jewelry, art, or collectibles, for example. But let's take a step back and let's rehash some old historical events back in time. The security and asset-backed ecosystem are just starting. So if we take a step back to 2017 and the ICO boom, Bitcoin is a hot commodity and the general blockchain space is blowing up. ICOs, the raises are going berserk. Many ICOs are just white papers with no minimum viable product or no product at all. This is where Tezos, with a $232 million raise, Polkadot with a $145 million raise, and Filecoin at $257 million raise, set the bar. The ICO craze stretched into 2018, where over double the money was raised, and almost $6 billion. Plus, there are frauds all over the place. The SEC finally stepped in to guide the general ecosystem. The SEC, to this day, is still handing out judgments over ICOs that happened back in 2017 and 2018. The lack of clarity from the government, and specifically the SEC, into keeping up with the blockchain into blockchain technology resulted in many tokens being securities. Remember, back in 2017 and 2018, it was a pure Wild West landscape. Now, in 2020, society has a better understanding of tokens, and the SEC is finally developing better guidelines for ICOs, albeit rather slowly. Next evolution. Where is the security token ecosystem going? As of October 2020, there are two main branches of security tokens, plus an alternative path. The first branch is tokenized securities for private companies. Private companies can only be invested in by accredited investors, which are high net worth individuals or businesses with assets exceeding $5 million USD. When choosing the private security route, companies are extremely limiting themselves to a very small pool of wealthy persons and institutions willing to accept the high risk, i.e., venture capital. In the second branch, companies can choose to go public and offer tokenized public securities which the public can't trade. Robinhood is a prime example and the benchmark when it comes to trading securities from your smartphone. The biggest challenge in getting companies to go public or transition from traditional securities to a tokenized security is either the cost of legally going public or the lack of infrastructure in the security token ecosystem. The cost can be significant. Everyone reading this should know the traditional cost for a nanocap or a microcap just to get listed can cost over $300,000 just to get started. Hopefully, with blockchain protocols and alternative trading systems, they can lower the cost of entry for businesses to access capital markets while also making micro and nanocap companies more accessible to the public. So, your local pub or store can be community held. The alternative path. The alternative path is to relocate your business overseas or at least into a jurisdiction that allows or has loose regulation around tokens, i.e. Malta, for example. There are significant relocation costs of the course of this action and higher complexity of operations as well. Many companies along this route are big enough to afford the relocation costs while regulators in the US get up to speed with the latest innovation. Binance is a perfect example. They would have been barred from the US, but Binance created a Binance.us subsidiary that only trades certain tokens allowed by US regulators instead of the main site. Binance is headquartered in Malta, and few assets are available for Americans, as I mentioned. Relocating overseas also makes sense if most of your customers are international as well.